please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Tell us now. The first Bank Nifty tick was a little red, but okay, now it's come back to green, 1/3% higher. Nifty is 0.5% higher, 65 up, 68 up, 11,300 is here, 11,305. Well, that's a very nice number to watch again, 11,300 plus, 11,310 as I speak with you, 78 up on the index, the Nifty that is, and 200 up on the Sensex, that's 37,330, almost 220 up now. It's 0.6% higher. It's almost racing to a 1% gain in rapid pace. Now 2/3%, now 0.7 higher on the Nifty. That's 75, 77 up, 11,310 can be taken as the first trade actually. The Bank Nifty is not really dragging much. It's up about 1/3%. So about half the amount of gains that is there in the big stocks, and it's 20% down on Yes Bank.
Yes.
So pre-market got it wrong. Pre-market said 10%. Okay, they can't fall.
Pre-market has a limit of 10%, so that's why.
Some people were speaking of circuit down, so 20%. But I wasn't very sure that would happen. It's 260 now, Yes Bank. So there are a lot of people who just want to get rid and probably wait and see what's happening. All the IT stocks are lower, and that's understandable. We showed you the rupee. It was 71.80 to 71.90, and that's having an impact on the IT stocks. That's the only red on the screen, actually. Yes Bank and all the tech stocks. Even HUL, which was threatening to be in the red, has now moved into the green. So techs plus Yes, and the rest of it is green. Anuj, if you don't mind, I'll read out the mid-caps as well. In the mid-cap space, your steel stocks are doing well. You have JSPL with 2.6% in terms of gain. Symphony is gaining 2% higher. Saskin Technologies and all the oil marketing companies. Biocon Granules from the pharma space. JSW Steel as well. Up. So steel is generally up. JSPL, JSW, all of them. And then, okay, well, that's the marquee guys, Page Industries, Variety are also doing very well. And in terms of the Red Brigade, you have Jet Airways, obviously. Yeah. Graphite India is also struggling a bit, 1.5% lower. PNB Housing is 1.3 lower. So, you know, that's where not all the NBFCs are jumping in joy with this 8.01, 8.02. Bond performance.
Yeah, but I think the market opening is really good because, you know, it opened where the pre-open indicated and then it moved on. By the way, Yes Bank is now down 25%, so just don't lose sight of that. Quarter of market cap gone. This was perhaps not the case where you said, you know, institution is bigger than individual. In this case, perhaps individual is the institution. And then, you know, as Dusan said, there's a fresh overhang. What happens to the 20% stake? So for now, 25% lower. The stock in the mid-cap market right now is Biocon. I think Nimesh has very helpfully told us why it's gaining. Mylan has announced authorization of a drug, Hulio, by European Commission. It's a large drug, you know, estimated at 4 billion. And it implies 17% profit share for Biocon. So that's the reason that you're seeing this move. But 30% now gone on Yes Bank. And that's the reason the Bank Nifty is just not able to move on. The Nifty is higher by about 0.6%. The Bank Nifty is almost in the red, and that's because of this 30% move on Yes Bank. Ashwani, this is remarkable, the way Yes Bank is collapsing and is having an impact on the Bank Nifty. Your thoughts?
How much lower can Yes Bank go? 50%?
Yeah.
So that means the bloodletting is out more or less. And if you see the rest of the banks, ICICI Bank is up 3%, State Bank is up, Axis Bank is up. The moment Yes Bank is done, I think, you know, Bank Nifty should move higher. And this is a good time to get into Bank Nifty because, you know, I think at some point people will start to buy into Yes Bank, and that will create that impetus on the upside. So definitely go ahead and buy. Once this is over, first half an hour, my sense is you should have a 200-300 point move on the Bank Nifty.
Okay, by the way, if you bought the Yes Bank 300 put on Wednesday, if you had any inclination of what was coming, you know, that's jumped 26 times. And it was very liquid. It's not that it wasn't liquid on Wednesday. There was a lot of volume which was traded at the 300 put on Yes Bank. And it's straight away the premium is up 24-25 times. We speak about multi-bagger stocks. Was the multi-bagger option. But
if you get it right, then options always make you more money. But just it was an extremely well-kept secret. Both the...
it was. I mean, in terms of timing, perhaps, it was.
Well done. Yes. It was, I think, very rationally timed so that the market digested it for a bit.
Okay, the bank Nifty is now moving, and look at that now.
I know.
200
aggressive
points higher.
Move.
Aggressive buying on the Nifty bank. Just see the intraday chart on the Nifty
ICICI, Axis. Exactly. So, Ashwini, your question is getting answered. Where will the Yes Bank money go? Axis and ICICI are doing extremely well today, as is even HDFC, the housing guy. Your thoughts,
and the
Ashwini?
next point is, if people went short on Bank Nifty in the morning, now they are going to get the rogering of their life.
Yeah.
Oh my God.
Ashwini, what about something like a Bajaj Finance? That's also now showing quite a bit of move. After opening just about 0.5% higher, that's now up about 1.5%. Any thoughts on this one?
See, all kinds of financials will fly. Today is the first day, your macros have kind of cooled off. So, whatever you can buy, because on Friday, all the financials closed at the lows. So anybody who went home with a short position is now immediately losing money. So that way, I think financials gave you a nice little entry. I wouldn't be surprised if Yes Bank recovers further and closes down only 10%. Because you have to remember how much it's fallen.
Okay, well, actually, a bunch of NBFCs are not taking advantage of the way in which the yields have moved. Of course, the IL&FS triplets are there, but there's also PNB Housing, IDFC, ICICI Lombard, Magma, FinCorp, Canfin Homes, PNB Gilts, and Cholamandalam, which are in the red. Not by a whole lot, but the point is, on a day when they should be having a Diwali, they are not able to celebrate. So you just want to worry about that. Prakash, anything on your radar?
Yes, certainly. I like a couple of stocks. I'll go with perhaps Axis Bank looks good. Can see a climb to around 630, 640 zones. I also like Asian Paint. That's a stock to watch here. Stop below the levels of 1295 or so. I think it's heading to 1350 zones.
We had the Bain Capital, the guy who have put in a lot of money in Axis Bank, telling us that they're extremely confident of Amitabh Chaudhary. Such a backing from the shareholders should also be a sentimental positive. Pitesh, last thoughts?
Yeah, Lata, I think to me, I in fact personally bought Yes Bank at about 240. I think the 220, 230 zone is a major support area on the longer term chart. So I think maybe the decline is over there. That about Dr. Reddy's and Gas Authority are the stocks which I would want to buy for the day.
God, it's yo-yoing, Mitesh. I mean, you must have noticed it already. Going all the way to 230 and now 250.
Yes, it fell to perhaps 30% was the final pain point. From there, it's bouncing back. Ashwini, what's the big call for the day then?
See, big call is that we will have some sort of short covering, and if this Yes Bank pain is reduced further, the way banks are open, first 15 minutes, these large banks, I think they could have a big day today. So still a good time to participate in this short covering move if people haven't already, because otherwise we would have opened 250 on Bank Nifty and 100 plus on Nifty. So there's still an opportunity, and beyond 945, the market could pick up much further.
Fair enough. Ashwini, Mitesh and Prakash, thank you very much for joining us through pre-market and taking us through the opening trades. With that, let's invite our market master for the morning, Krishna Kumar Karwa, Managing Director of Emkay Global Financial Services, is with us. Good morning, Krishna. Thank you very much for joining us. We meet with a radically different backdrop. If we had met a week ago, we would be somber about the rupee going towards 73. It was actually last Wednesday, if I'm not wrong. And we would have met with the yields at 8.2. Now it is 8.02 on the yields and 71.80, I think, on the rupee. Do you think the scare the market has got is over now? Did you pull out your shopping list earlier on Wednesday itself?
I think I'm not prone to such knee-jerk reactions either ways, and I think the market kind of the currency market and the bond yield markets, etc. I think they overshot over the last 1 week or so, and again the kind of reaction today that we are seeing. Let us see whether it sustains. But our house view is that the rupee is headed towards 75, and even as far as the bond yields are concerned, I think we still believe that it should still harden to maybe 20-30 bips more over a period of time. So I would not be so enthused or excited about what has happened overnight. Let's see whether it sustains.
Okay, Yes Bank, by the way, is now recovered almost 10% from the low point. It was down 30%. Now it's down 20. So there's a bit of a recovery playing out. Okay, 23% down now on Yes Bank. Krishna, good morning. Your thoughts on the way this entire saga on Yes Bank is playing out?
See, if you look at the history of Yes Bank in terms of valuation, it is always quoted at some discount to its peers. And this RBI action in terms of not renewing or giving a last date for the current MD, etc., possibly is a culmination of whatever in terms of how the bank has been managed, or maybe RBI feels that there is requirement for a change. But having said that, it's a large institution which has got created over a period of time, and this kind of knee-jerk reaction by investors of a 25-30% cut, I think valuations look very attractive. I'm sure there will be another able gentleman who will come and run the show. So from a long-term point of view, I think it's an opportune time for investors to be looking to invest in the bank.
I can see that you're losing faith in lady bankers. Well, just as an aside, Krishna. But, you know, there are people who even talk about it as an acquisition candidate. You know, will you just focus on valuations? How will you advise your research team to approach the stock?
Yeah, as I said, I think first of all, to create an institution has its own challenges, and this is a very well-established institution, and no doubt the person at the top has been very, very powerful. But at the same time, I'm sure there will be equally able gentlemen who can come and, or a lady, as you said, can obviously come and run the show. But as far as mergers, etc., I don't think we have thought through it in terms of whether there is a possibility of that kind of an opportunity coming up. But yes, there are candidates in the system who need to reduce their stake. And for them, possibly this could be a very interesting acquisition if it happens.
Okay, very volatile for the market now. Of course, largely on the way up, though, after that initial move on because of the Yes Bank. So, Krishna, thoughts on how to approach the portfolio positioning from here on? Because for the first half of the year, the challenge was to only be in the 8 or 10 outperforming stocks, the Bajaj Finances, the HDFCs of the world. Now things have completely reversed. Now, we've started to see selling in some of these large stocks as well, while IT and pharma has taken over.
See, honestly speaking, in terms of portfolios, you cannot chase momentum. I think you have to create a portfolio from a medium-term perspective. So that's the way your portfolios are created. And if you would have invested in IT maybe around the same time last year, you would have been sitting now in 40-50% kind of return. And similarly, in pharma, if you would have invested maybe 3-4 months ago or maybe 1 quarter ago, again, you would have had decent returns. So finally, it all ends up and where there are valuation supports. Yes, the market was very narrow in the month of August, and only 8-10 stocks did move the market up sharply. But overall, I believe that this is a time of consolidation, and portfolios need to be reasonably balanced as such. So you just cannot go extremely overweight on overvalued sectors despite growth being there. So a case in point obviously being your whole consumption or FMCG sector, where valuations have gone out of whack, and we have seen some corrections. No doubt they will continue to deliver good numbers even in this quarter, but whether it gives you a sufficient margin of safety. So I think it's going to be a balanced portfolio approach rather than, and I think again it will be skewed towards the large caps in the interim. I mean, we always profess to be very positive on mid-market segment, but looks like that segment is in a kind of a consolidation, and it will continue to be in consolidation despite many bottoms of stories delivering for some time.
Okay. Okay, Krishna, let's move to the other areas. Steel is having a good day today. Some people think it will have a good time, or the good times will continue. You like that space?
So we are positive on the sector, and rightly we believe that there is a decent amount of demand growth within the country, as well as there is regulatory support in terms of various anti-dumping duties, etc. And also globally, there have been countries in terms of production, etc. So whole the global as well as the local environment for steel continues to be robust. So I don't know about what can happen in the short term, but from a medium-term perspective, the steel sector offers good opportunities.
Okay. Steel sector is offering good opportunity. In fact, steel is doing well. Today also, Jindal Steel and Power up 4%. JSW Steel, which by the end of this month will be part of the index, is also looking quite interesting. Oil marketing companies, Krishna, that's a space which has corrected quite a bit. Though till now there's been absolutely no pressure on their pricing power. In that sense, do you think it's an opportunity, or is there some challenge considering you have big elections lined up now?
So basically, yes, the valuations of most of all the oil marketing companies are very, very reasonable. But looking at the nature of the ownership, which is basically government-owned, and government-owned institutions, you never know what is in the minds of the government at various points of time. So there is reasonably misalignment of interests of the majority owner versus the minority shareholders. So I would be, okay, can it be a trade? Yes, there is possibly a trade in OMCs, but can they be wealth-creating ideas from a longer-term perspective? Certainly no.
Okay, actually you put it so nicely. The majority shareholders' interest, you would never know. For instance, those 3 bank mergers. I mean, it's very good. Governments don't need 26 banks, and they're bringing it down consistently. But what about the minority shareholder? No one is even, bothered about the possible guy who carefully researched and picked up a Vijaya Bank. His stake, much more than the BOB investor, has been hurt. Krishna, before I come to PSU banks, I wanted to ask your view on NBFCs. Although you have seen bond yields going down, that is for G-Secs. If you look at AAA companies, AA and that kind of paper, it's still pretty tough on them with yields shooting up. Your take on the sector?
Inherently, structurally, I think NBFCs are in a sweet spot, and I believe that strong NBFCs will continue to do well, whichever chosen line of businesses that they are in. I think market has, I think they've had a good run, and in last 1 month or so, there has been some amount of correction across the NBFCs in fear of rising interest rates and maybe tightening of liquidity, etc. But my sense is that many of them will be in a position to be able to pass on the increased costs to their end customers. Possibly housing finance companies, where there is extreme competition from the banking system also, and specifically from the public sector banks also. Maybe they could be under some pressure on net interest margins, etc. But otherwise, I think the correction which has happened in many of the NBFCs should be an opportunity to buy from a medium-term perspective.
Krishna, the remarkable index this year has been auto index. It's, I think, one of the only few indices which has been in a bit of a bear market of its own. There have been some which have outperformed the likes of Mahindra and Mahindra, but Maruti's fall has been quite crunching. Your thoughts on this space?
So if you look at the fact is that the rural India focused companies that you mentioned, obviously that have delivered because the growth has been very, very robust over there. But if you look at the two-wheeler space as well as the four-wheeler space, I think there have been some challenges in terms of overall growth and as well as the valuation. So if you talk of Maruti, I think it has corrected sharply over the last one and a half months. I think it's a function of the margins kind of being under pressure, etc. But from a medium-term perspective, this sector offers good opportunities. This is more of a short-term correction than what you are witnessing. Maybe a one-year kind of a consolidation has happened in the sector.
Okay, Krishna, we leave it there. Thanks a lot for joining us. That's the view from Krishna Kumar Karwa of Emkay Global Financial Services. The market's looking quite good, but once again, there's some selling pressure which is there in NBFCs. And while Bajaj Finance is the one where every time it's showing a gap up, that's being used to sell into. Just see that stock. The other one where you're seeing quite a bit of selling pressure now from the high point is Indiabulls Housing Finance. Just pull out the intraday chart on Indiabulls Housing Finance because it opened with the gap up, but it's now moving towards the low point of the day. So is there anything that the market is worried about for Indiabulls?
Actually, there are quite a few NBFC stocks in like PNB Housing and all which are not participating in the in what should be a celebration that yields have fallen from what we feared 8.2 to 8.02. I could say that of Shriram City Union. Okay, Shrey Infrastructure, obviously. These are Magma FinCorp. All those stocks are also not participating in the rally. Now, you know, I refer to the Morgan Stanley report, which has given you a lot of details on how many people are exposed to the IL&FS group, but they are also telling you how many of them are stretched, because the report itself is on NBFCs. It says NBFCs risks from the ILS downgrade. Okay, so generally they're looking at the tightness in the money market affecting some companies, and they point out that some of them, their total borrowings are, you know, many times their own net worth, and Indiabulls is one of them. Okay. The net worth is 147 crores. Sorry, the net worth is 164 crores, but their long-term borrowings is 1,298. So there is a big difference between their net worth and, I mean, the borrowings are many times their net worth. They similarly tell you about Shriram City Union. They also tell you the same problem is with LIC Housing. So wherever the borrowings are very huge, then you will have to renew those borrowings at higher and higher yields. So there could be a problem for these kinds of companies, seems to be the point. Now, Indostar doesn't have a problem. They just raised money, so there isn't an issue. Aditya Birla, not a very big issue. And even if they want, they have the Birla name to borrow. So that's not a very big problem. Edelweiss as well. The ratio is not very high. I mean, it is high, but not as much as it is for LIC Housing and for Indiabulls Housing. So all this could be preying on the market's mind at this point in time. Okay, speaking of Yes Bank, I believe we have an expert with us. Kunal Shah of Edelweiss Financial Services joins us on the phone line. Kunal, what is the way to approach Yes Bank now at 257?
No, so I think overall in terms of because of this change at the top management level, so because of RBI's reluctance to extend it, as well as uncertainty with respect to the new leadership, as well as what happens in the near term. So we had seen this reaction in the stock price, but again, institution has come a long way over last 13-14 years. And since Rana Kapoor was instrumental in building that up, there is a reaction in the stock price. But at current level, if we really look at it, stock is almost at 1.6, 1.7 times multiple. And maybe in terms of because of the franchise strength, the overall return profile in the longer term would still be sustainable. So I think at the current level, apart from the near-term uncertainties, maybe from a longer-term perspective, it makes sense at 1.6 times book.
Okay, Kunal, good morning. The other issue is a bit of an overhang, right, on from the capacity of Rana Kapoor from here on, and he also has sizable stake in the bank. So there's some fear that if he's not even allowed as director, then perhaps he looks to sell the stake as well and monetize it. So that would create a bit of an overhang. Your thoughts on that?
No, so all around, be it in terms of who comes as a new MD and CEO, what position will Mr. Rana Kapoor be in. So all that uncertainties are very much there. And he is owner as well, but I don't know, maybe immediately whether he would look towards offloading the stake. And I think the way we are seeing in terms of maybe many of the NBFCs are on the cards, okay, but there is interest coming in from say few of the private equity guys and all. So I'm not sure in terms of the stake sale from Mr. Kapoor's side, but even if there is some development on that front, there would be takers at a particular level of the price. So I don't think maybe at the current level it shouldn't be the major overhang as such. It seems to be like largely getting priced in.
Okay. Well, thank you very much, Kunal, for joining us with your thoughts this morning on Yes Bank. We'll take a look at the markets now, actually going from strength to strength. Up 0.7 at this point in time. The Bank Nifty is the only one that's dragging a bit, but even that is up about 0.6, with despite Yes Bank contributing minus 20% to that index. Of course, it has 5% weightage in the Bank Nifty, so easily outweighed by giants like ICICI and Axis. Okay, from that, let's move to another space, the FMCG space. There were big buzzers earlier this month before seeing an equally steep correction. Let's take stock only of the situation on the ground. We are being joined by Suresh Narayan, Chairman and Managing Director of Nestle. Good morning, Suresh. I accept your point that you're not going to talk financials, but actually we want to understand the situation on the ground. FMCG companies have been telling us that rural growth is back. How is it for you? How does the growth of rural areas compare with urban growth?
You know, as a company, in the last 6 to 7 quarters, we have seen very consistent and very steady volume growth. So our volume growth has been in the region of anywhere between 7 to 10%. So it has been a sustained volume growth across categories. So all our categories have recorded volume growth, and also I can say that this has been secular. So it has been across geographies as well. So for us, our own play in urban India is much larger, but I can say that the rural growth also has picked up in the last couple of quarters, and I'm reasonably confident that this trend would continue for a while.
Okay. Well, since you're speaking about breakfast cereals, how's the volume growth there?
Well, Lata, as you have seen, we just launched our breakfast cereal range, Nest Plus, which was launched on Amazon Prime. It was the first ever for us. The response was quite encouraging. We reached almost 26 million people as a result of the Amazon Prime initiative. We had orders from almost 27 out of the 29 states in the country. That also debunks that, you know, there is demand for good quality nutritious products pan-India and not just in particular cities. We were selling at the rate of 1 pack every 3 seconds. So that was during the Amazon Prime time that they had kept out. So it has been a very encouraging response for us. So clearly with this, Lata, as I have said before as well, I reiterate this, that we really become a full play, credible breakfast company, because, you know, starting from milk to coffee to yogurts to breakfast cereals to oat and atta noodles, I think we are having a full range that can become a credible platform for everyday breakfast moments of people. So I think that's the way we look at it. We've just had our Maggi special masala that we've just launched on Flipkart. That has also had a terrific response. I mean, it's really a melange of 20 spices from different parts of the country that have come together. Again, the rate of sale on Flipkart has been 1 pack every 3 seconds. So again, it's been off to a good start. Clearly, Lata, what we are looking at is that the new category that we have entered is really breakfast cereals, and I think that is a category in which we are committed to, and we are serious, not just for the consumer footprint that it creates, but also for the opportunities to upgrade the quality of nutrition and wellness that we can offer consumers. So that will really be something that we are quite excited about.
Okay, Mr. Narayan, good morning. So breakfast and nutrition, that's your focus. So it makes sense to acquire Horlicks then?
As far as the media is concerned, you always thrive on speculation, but companies like mine do not answer to speculation.
So should I take that as not interested?
At the moment, this is the whole realm of speculation as far as, you know, whether we are there or not there. But the fact of the matter is that yes, we have got malted food drinks very clearly as a category where we have leadership positions in many countries.
Okay, then let's move to your main business. After almost 3 years of Maggi crisis, is the market share back to the previous levels?
in terms of market share, we are upwards of 60% in terms of our market share. The exit market share that we had when we had this unfortunate calamity on Maggi was closer to 75-76%. So in terms of market share, there is still a gap, but what is very heartening, and I would like to tell you this quite categorically, that in value terms we have exceeded what we were selling in 2014, and the volume gap is just about 5 to 10%. So it has been a very strong comeback, both in terms of consumer trust and in terms of the value of sales that we have achieved. Also, the traction that we have received geographically on the brand Maggi has been extremely heartening.
Okay. Suresh, in that case, just one final word on volume. Can you give us some direction on how you see volume growth in FY19?
Well, as you know that we don't give you guidance on what the future will be, but if you look at our track record in the last 6 to 7 quarters, it has been anywhere in the region of about 7 to 10%.
Okay. Well, that was on volume. Now let's talk margins. How are commodity prices shaping up? It looks like the tailwinds have now become a bit of a headwind. So will you take price hikes to pass them on?
Look, it's a bit like this, Lata. I mean, as you know, that our results till the first half of this year had a very clear element of commodity tailwinds that were factored in, and also, of course, the scale effect with Maggi coming back closer to where it was. So I think in every sense of the term, that's what was also translating together with greater efficiencies on costs. We were able to translate almost a 500-600 basis points improvement in the operating margins. But you know, as I had mentioned then, and as I continue to maintain now, commodity headwinds have started. I think the costs have started to go up, and of course, together with an outlook that we are quite positive on the agricultural outlook, but you know, so far I would certainly like to continue the strategy of volume-led, penetration-led growth, which means that I would like to see how best as a company we can mitigate some of the cost increases. But if it really becomes rather difficult to manage, then we might have selective price increases.
Okay. Suresh, I have a lot of questions for you, but we are running out of time. Just before I let you go, personally, what do you prefer, Horlicks or Complan?
All these brands are great brands, and may they go to the best suitor.
All right, that's a nice answer. Thank you very much, Suresh Narayan, for joining us with your thoughts today. Well, with that, we have to take a very quick break, but we have a very important head honcho of Corporate India joining us now, Bhaskar Bhatt, Managing Director, in a minute.